Hello, it's Adil Fazal here, market analyst for CFDs.com, bringing you a review or morning market review of the European markets from an intermarket analysis perspective. As always, this video is brought to you by CFDs.com. Be sure to visit and certainly review their products and services. Alternatively, you can visit the educational website, which is www.cfds.education, to certainly learn more. Okay, let's begin. In terms of the Asian markets, first of all, you had the Shanghai higher overnight, just about, almost 0.8% higher, but you had the Hang Seng down, and you had the Nikkei down as well. You did have a late rally yesterday from the US markets perspective, but that certainly is facing resistance now. The rally itself occurred last night because you had the attempt at downplaying the tensions, obviously, that have obviously occurred between Russia and Turkey, but that certainly seems to be going the wrong way, because we've had news out this morning with regards to Russia now obviously mobilizing surface-to-air missiles, and in order to prevent the same incident occurring again. So that certainly seems to be increased rhetoric, and the proxy war between America and Russia certainly continues and is only escalating. We had a rally in oil overnight, and commodities certainly caught a bid because of the fact that the fair trade, or the geopolitical trade, certainly sent commodities higher and triggered a short squeeze, but they were not based on strong economic growth. It was mainly due to fear. And when commodities go higher based on fear, then that generally does not have a foundation, or any rally in equities does not have a foundation, and generally tends to fizzle out very quickly. Now, we have had a short squeeze as I talk with regards to European equities, given the fact that we've had the talk, or chitter-chatter, or talk, or rhetoric from the ECB, basically stating they're going to have a broad-based buying program, and they are going to potentially pause and extend in terms of QE as well. So given the fact that the liquidity dries up over the Christmas period, then that certainly is going to trigger off the actual well, that certainly sent the Euro USD comments like that certainly sent the Euro USD lower. As we know, we're trading currently at the 1.06 handle, so certainly is helping the risk on trade in Europe. I wouldn't call it risk on, I'd call it more of a short squeeze. The talk is ECB discusses two-tier bank charges, broader bond buys. Okay, so given the fact that liquidity dries up, they want to expand the scope of their obviously purchasing of bonds. Now, my perspective on the ECB doing QE now, given the fact that we are going into December, even though they have claimed that they are independent of the Fed, given the fact that the Fed is obviously hemmed in now, is locked into a rate hike in December, it doesn't really make sense for the ECB to do QE, especially given the fact that we've had stronger German data as of late as well. So Germans, and also we've had a few individuals actually talk against any potential of further QE. So everything from my perspective certainly indicates that there will not be any QE. From my perspective, there certainly will be talk, and it's interesting how the rhetoric comes out when the markets are under pressure, just to trigger a short squeeze. So it's a short squeeze. Will it last? No, that's my interpretation. Now let's have a look at the actual markets themselves. Now, in terms of economic data this morning, you've had French consumer confidence come out slightly better than expected. Overnight, nothing really of any importance. We've had industrial data and from Italy, slightly better than expected, and mortgage approvals and retail sales, slightly better than expected as well, from a year-on-year basis, but on a month-on-month basis, certainly weak from Italy. So no real market moving news as such, other than the fact that geopolitics and terrorism concerns remain at the forefront, and they will dictate price action. So let's have a look at price action and see exactly where it's headed. Now, the DAX itself, German DAX, we have had quite a stellar rally this morning. Now, looking at a daily chart, it's still an inside bar, so bear that in mind. It still hasn't negated yesterday's red candle, so therefore, given the fact that we have geopolitical concerns and terrorism concerns, they will still continue to dominate, hence the reason why that red candle has not been taken out, because those concerns still exist. Like I said, we've had talk with regards to, the Russian PM, or Russian ambassador, basically has caused, even Mr. Putin has actually stated that the actions by Turkey were basically criminal, and have accused Turkey of supporting ISIS. So that certainly is not going in the right direction, and that has actually failed to cause oil to rally as well. I mean, we've had a pivot high of 42.1 overnight, and now oil is back at trading at 41. So that isn't exactly positive news. Okay, so again, it's from my perspective certainly bearish. Now, looking at the 60-minute chart of the German DAX, yes, we've had this thrust higher based on this QE talk, etc., etc. Now, what's interesting here is that we have a HNS formation. So all eyes on the HNS formation from my perspective. So let's just have a look at this chart here now. We have resistance obviously in that zone. So previous support equals resistance on the German DAX, and that will remain. So all eyes on previous support equals resistance. Yes, we do have an unfilled gap up here. So again, all eyes on the unfilled gap. Given the fact that we've had terrorism concerns, etc., etc., it's very hard to envisage that gap closing for now. Okay, so looking at the right shoulder, and it's all about this right shoulder on the German DAX. So the current trade is QE versus geopolitics and obviously terrorism. So which one will win? And it's going to be an interesting battle when this plays out. So we are into that fib 75% resistance on the right shoulder. Looking at this HNS target, you have an unfilled gap below. The pivot high is 11,150. The neckline is 10,080. So you're looking at a 300 plus potential point drop. Now you do have an unfilled gap at 10,500, so don't be surprised if that closes. Now again, the euro has certainly been sent lower, but will the euro continue to move lower? It's, from my understanding, no. Okay, given the fact that you can see weekly chart as solid support on the weekly chart, daily chart, again you are coming into multiple areas of potential support. And if you look at the euro GBP chart as well, you can see that we are potentially coming into support. Looking at the dollar chart itself as such, you are looking at potential weakness on the dollar as well, given the fact that you have been putting in lower highs. So this is going to be very interesting, Now, also given the fact that you have geopolitical concerns and terrorism concerns as well, then that will lead to the reversal of the QE trade, i.e. European equities lower, and that means Euro USD certainly propelled higher. That's my understanding and my interpretation of things as such. Okay, and the reversal in the QE trade. Now, looking at the cross-referencing that now with the MDAX, you can see the MDAX again is now coming into resistance. Also, cross-reference the Tech All Share. Again, Tech All Share is now coming into resistance. We've had quite a stellar rally, and that certainly seems to be ending. Okay, so looking at further resistance and pressure there. Now, looking at the Euro stocks itself, yes, we've had this rally and we've closed the gap at 3445. The whole inverted head and shoulders target. We've hit the 3436, and therefore the IHS formation has obviously been negated, and now we have this risk-off scenario. So looking at weakness on the Euro stocks. Looking at the 60-minute chart, you can see we have closed the gap. We've reversed fib 75%. We've negated the HNS neckline as well. As such, we failed to close the gap below, and that gap certainly remains the gravitational field or gravitational force that will send this index lower. The French CAC on the daily chart, you clearly see we've closed the gap on the French CAC. I've actually gone short a gap fill. Okay, we have this diagonal trend line that's in play, and therefore looking for further weakness. Again, you can see the 10-minute chart, you've closed that gap. That's exactly what I shorted this French CAC, and looking for further weakness. Now, FTSE 100 itself, yes, quite a stellar rally given the fact that commodities obviously have helped this morning, although commodities certainly are lower. So what's caused the FTSE 100 to propel higher? Now, we have talked with regards to Mr. Osborne, and the house builders or the house building stocks certainly are doing well this morning, given the fact that there's a potential subsidy for new houses to be built, and that's being interpreted as bullish and its budget, etc., etc. So that certainly has led the FTSE 100 higher. We've had positive earnings from Britvic and also Thomas Cook as well, turning into a profit after so many years. So they are the factors that are sending the FTSE 100 higher, not commodities. That's interesting. Okay, so not commodities, it's the other factors at play. Now, the 60-minute chart, you can clearly see that we are into resistance in the zone here on the 6330 level. I have been stopped out on my short at 6338 on the FTSE, and I will be looking to re-short later on. I still expect further weakness. 10-minute chart, you can see here we have this gap level that's certainly holding the resistance as such. Now, looking at the daily chart, you have this key diagonal trend line. We're obviously holding that fib 61 to 75% resistance, and looking for a new lower low and a lower high. So again, my bias certainly remains bearish on the FTSE 100 at this juncture. So conclusion, geopolitics and terrorism will dictate price action, and the fear index certainly is rising. If I bring up the chart look at VStock, and look at the actual 60-minute chart here, you can see that we are building a base on the fear index in the 60-minute chart. Bring up the FTSE volatility index as well, and you shall see if no, we don't have that here, unfortunately. Okay, so it's only the Euro stocks or V stocks that we can focus on for now, and you are back into support in terms of fear. So fear certainly will dictate uncertainty. is certainly negative for stocks, and especially given the fact that the rhetoric from both sides it still remains, and given the fact that when you have geopolitics, any small statement can send this market considerably lower. Okay, so again, all eyes on the situation that's unfolding with regards to Russia and Turkey, and obviously the situation which is ISIS. Okay, I think that's a wrap for the morning. I expect weakness in the next 12 to 24 hours. Goodbye now.